Hi, this is Gary Hansen with Professional Insurance Strategies, and today we are talking about the general liability audit. Now, this one's kind of specific to a contractor, maybe even a general contractor, but it should give you a good guide as far as filling out these audits and making it very easy to do. If you have good record keeping, in your office, that's the key to a successful audit. Really it boils down to having good records, having a good system of tracking certificates for subcontractors or contractors you're working with. If you have a good system, if you have good record keeping, these audits should literally take you maybe 20, 25 minutes to get done. Most any audit on the general liability is the same. So we'll go over this one quickly. I'll help you. Hopefully, we answer some questions. And like I said, if you have a good system for tracking certificates, if you're a general contractor or you use subcontractors, and you have good record keeping like QuickBooks or some other type of payroll company, ADP, anything like that to track expenses or payroll, this will make this a breeze. So first question on this audit is, do you perform any work under a project specific policy, RAP, OSIP, or CCIP? Basically, what these projects are is when the owner of the project, whether it be a developer or owner of a condominium that's being built, they purchase the general liability for you, and they basically pay you less what the insurance costs them. So if you're a plumber, they assign a amount of dollar amount, per payroll, $100 or $1,000 or however they set it up with you. The administrator for the wrap up policy should tell you ahead of time. You subtract that out of your general liability when you're going through the audit. So again, if you're a plumber and you are, let's say you do a wrap up condo project, and your payroll for that project specifically for that project was $100,000, you do not include that in your own general liability audit. Second question here, how many active owners in the field? These are only active owners. So for this specific company, if you have 4 owners in the company, 3 owners are capital contributors. They don't actually work for the company. They just invested money and they're considered an owner. And you have 1 owner that's doing, the work in the field, then you're going to answer 1. Going down here to gross income, this is all gross money that comes into the company. So total gross sales. Sometimes your insurance company is going to base your policy on sales, payroll, and subcontractor costs, and then they're going to get a basically it's called a blended rate, and they take that blended rate, and then at the end of your audit period, anything over or under that sales amount, because then they'll just base it off of sales with the blended rate usually, is how you're audited. So gross income is total sales. It doesn't include, you're not deducting anything off. This is just the total net. This says number of employees in the field. On this one specifically, they exclude the owners and the clerical. Gross employee payroll, that's the next line. Again, pretty self-explanatory. The next one is payroll for temporary labor. Again, leased, borrowed, casual employees. A lot of people will say, I have temporary employees or 1099 employees. Those, I'm not going to count those people. But if they don't have their own insurance, they don't have their own company, they're not, they're not an actual entity. It's just Bob that does your plumbing work for you. He doesn't have his own company. He's not licensed. He doesn't have insurance. Even though you give him a 1099, he's still considered a employee, because if something happens and there's a claim, your insurance is going to have to cover Bob's work again, or the damage that Bob's work does. I, and then it comes down to subcontractor costs. Those are legitimate companies that have a tax ID. They might be a licensed contractor. They should be a licensed contractor. They have their own insurance. They name you as additional insured on their policies. That'll be in the next portion that we talk about. And then you are going to add those costs in there. And then it asks, if you included materials or if you provide materials not included in the figures above. If so, what's the cost? On this one, they make it easy because they ask you the audit term, you can see up here, and then your next term projection. So they make sure that maybe you just had a big year the first year, and then the next year, you don't have as much work, so it's not going to be as high. So that's important to look at there. Going back to subcontractors, these are guys or girls that have their own company. They have an EIN number. They're a licensed contractor. They have general liability insurance. They have, workers' comp maybe if they have employees. You're going to ask them to sign a subcontractor agreement, naming you as additional insured on their policy with waiver of subrogation. Something we always tell our customers is that you want to make sure that you have that document signed, that subcontractor agreement up front. You want to, make sure that you're not paying out any money until you have that subcontractor agreement. You have their certificates of insurance in place, because it's always tough to scramble at the end of the year and of your policy period, and you're trying to get all this information from all the people you've done work with, and they're not calling you back, their agent's not helping them. It just makes it easier to get it up front when you sign the agreement. Then you don't have to worry about trying to get this stuff done at the end of the year. Percentage of commercial work. This is really important to make sure that your policy is covering you adequately for the work you do. A lot of contractors and they want to get jobs. They want to stay busy. They want to keep their crews busy. Maybe they're a general contractor that builds a home sometimes, and sometimes they might do framing for other contractors. That's all fine, but you need to make sure that your policy, your general liability policy, is covering you for that work. So it is important to take the time, go through this. This isn't to catch you up or, cancel your policy. It's just to make sure that during the course of the year, the work that you're doing is actually covering you under your general liability policy. Another key question on this one is number of vacant lots. So if you have a vacant lot and you don't tell your insurance company, that's not covered in your general liability a lot of times. So you want to make sure that you tell them, yes, I have 5 empty lots. Here's the addresses, because we want to make sure that they're added to the general liability policy. So if something happens on those vacant properties, that the general liability is going to kick in and cover them. Again, kind of what we talked about with the jobs and what you're doing. As a general contractor, you want to make sure that, for certain policies, as a general contractor, if you're doing a remodel job where you're doing framing, you're doing the windows, you're doing doors, and you're doing drywall, that's fine. But if you're a general contractor and all you're doing is framing jobs and nothing else, then you need a different policy. So you want to make sure you're covered correctly. Again, this just kind of talks about different types of jobs, that kind of stuff, and then you'll have the right insurance, the right policy, and you'll pay the right premium. A lot of general liability policies, or most of the general liability policies are auditable. So if you at the end of the year, if you did less work than you anticipated, you're going to get money back. If you did more work than you anticipated at the beginning of the policy period, then you're going to owe. So it's important, again, to have the right type of insurance policy. My name's Gary Hansen, Professional Insurance Strategies. If you have any questions, give us a call. My number is 602-481-0161. Thanks.